Okay, so let's just get right into it. You think of yourself as a long-term investor, right? You believe in compounding, you're in it for the long haul. But have you ever actually looked at what your brokerage account is doing? Because it might be telling a completely different story. And today, we're going to close that gap for good.
On the left, that's the dream. That's the story we tell ourselves. This calm, steady line going up and to the right. But then on the right? Yeah, that's the reality for most of us, isn't it? A chaotic scribble of trades, cash just sitting there doing nothing, a lot of tinkering. In this explainer, we are going to pull the actual receipts on your investing habits and install a simple system so your money finally behaves, even when you're busy or the headlines are screaming.
And here's the hard truth, the one nobody really likes to hear. Most of the money you lose out on, it doesn't come from picking the wrong stock or the wrong fund. Nope, it comes from your behavior. From trading too much, chasing whatever's hot, and letting cash sit on the sidelines waiting for clarity. So we're not going to try to fix your picks. We're going to fix your habits.
So let's start by meeting your two investor selves. First, you've got the story you tell, the cool, calm, long-term strategic genius. And then you have the receipts, the cold, hard data of what you actually did.
So how do we find out the real story? We pull the receipts. And it's a simple 4-step audit. First, just export the last year or two of your account's activity. Then, you get to play detective. Go through every single trade and tag it. Was it baseline, something you planned and automated? Or was it impulse, a reaction to a news alert or a gut feeling? Step 3, highlight how much cash was just sitting there every month. And finally, the moment of truth. Be really honest about how long you actually held each of your positions.
All right, you've done the audit. Now it's time to face the data. This is that moment where the investor you think you are meets the one you actually are. Let's see what the numbers usually show.
Now, we're going to calculate one single super important number from that audit. I call it the behavior match rate. And it's simple. Just look at all those trades you tagged. What percentage of them were baseline, the automatic plan ones you set up in advance? That one number tells the entire story of the gap between the investor you want to be and the investor you are today.
So, what's the typical score? Well, based on a whole lot of real investor data, the average behavior match rate is just 42%. Think about that. That means for most people, the majority of their actions in their investment account are driven by impulse, not by their own plan.
Yeah, ouch. That one kind of stinks. Just let that sink in. For the average person, more than half of what they do with their money is actively working against their own long-term goals. It's like you're trying to drive to a destination, but you keep grabbing the steering wheel and yanking it in the wrong direction. And what about all that cash you highlighted? The average investor lets a big chunk of their cash just sit there, doing nothing, for 29 days out of every quarter. That is nearly a full month where your money is on vacation. And we all know the excuse, don't we? We tell ourselves we're just waiting for clarity. But listen, the market is never clear. That's just how it works. So waiting for clarity is just a fancy way of saying missing out on compounding. It's such a classic, costly trap.
Now this is the real kicker. What about that whole long-term investor identity? Well, the median holding period for the top positions in a typical account is only 41 days. So, let me ask you straight up. Does 41 days feel long-term? Of course it doesn't. The receipts just don't lie. But you know what? The good news is we can fix this.
Okay, enough with the problem, let's build the solution. We're going to move from being an actual investor to what I call a systemic investor. And the whole goal is to make good behavior your automatic default setting. This right here, this is the core of the whole system. Just think of your portfolio in two simple parts. The vast majority, say 93%, that becomes your baseline. That's the boring, automatic engine that just works in the background. Then you have this small slice, maybe 7% for your tilts. This is your pre-approved playground for your big ideas and hunches.
So the whole system has 3 parts. First, the baseline, your core, automated investing. Second, the tilts, that small capped area where you can experiment without blowing up your whole plan. And third, tripwires. These are just simple rules you set up in advance to create a little bit of friction, just enough to stop you from making a bad impulsive decision.
So this is where we started, right? The average investor, with a behavior match rate of just 42%. This is a portfolio where moods and scary headlines are driving way more decisions than any actual system is.
All right, pay attention, because if you remember just one thing from this entire explainer, I want it to be this. If your audit shows you tend to buy high and sell low, the solution isn't a new stock tip. The solution is a better system.
You need to fix your habits, not your picks.
And when you do that, this is what happens. By putting this simple system of baseline, tilt, and tripwires in place, you can totally change your behavior match rate. We're going from that chaotic 42% all the way up to a target of over 70%, in this case, 78%. This is where your system, not your mood, is in the driver's seat.
Okay, let's make this real. Enough with the theory. What can you do, like right now, after watching this to get started? Here are your first 3 steps. First, do the audit. Seriously, export your last 12 months of activity and tag everything as either baseline or impulse. Second, go into your brokerage account right now and set up 2 automatic buys scheduled for 2 days after you get your next paycheck. This kills that cash drag before it even starts. And third, create your first tripwire. Add a note to your phone or a sticky note on your computer that says any trade over a certain amount, say $500, requires a 24-hour waiting period.
And when you're explaining this new approach to your partner or a friend, just use this line. It's not about being some clever market genius. It's about being reliable. It's about building a system to make sure you actually get to keep the returns your investments are supposed to be earning for you.
So I've got a question for you. Based on everything you've just heard, take a gut check. Do you think your behavior match rate right now is above or below that 70% target? Drop above or below in the comments. No judgment at all. Let's just get a sense of where we all stand.